Hey everybody, what is up? Welcome back to Final Trade. I trot out these three poor maligned sets once again, but I do so to tell you a story and hopefully teach you something. In stock market investing, there's this strategy used called Dogs of the Dow. And of course, it's a reference to the Dow Jones Industrial Average, which is a composition of 30 large companies in the United States. And the strategy that is employed is that you take those companies and you rank them in order by their dividend yield, which means the dollars of dividend that they pay per year divided by the value of the stock. And so if the stock was $100 and it paid a $4 dividend, the dividend yield would be 4%. So you make a list ranking them in order by their dividend yield. And the reason you do this is because stocks on the Dow Jones Industrial Average will be very conservatively run. They are very big companies. They don't take huge risks. They are old and have very good management generally. But they don't increase their dividends up and down for light and transient reasons. They will slowly march them up over time consistently. And so if you look at these companies and one of them suddenly has a very high dividend yield, it is not because the numerator in the ratio that determines the dividend yield has gone up suddenly. It's because the denominator, which is the stock price, has gone down. And so the idea is that when these companies get high dividend yields, it's because the stock price has suffered. And then there's a further assumption that the stock price of these companies will, over time, very generally go up 8 or 10 or 12% per year, depending on what kind of measure of the overall market you like to use. But generally in the US, 8 to 10 to 12% yearly performance year over year forever is about what you expect. And if these stock prices for any of the members of the Dow are down, then it's probably only a temporary thing. They've probably fallen on a temporary hardship, or the market is being overly emotional, or something else. And so the strategy of Dogs of the Dow is after you've made this ranking of the 30 companies by their dividend yield, you then buy starting at the highest yield and working down the list as far as you want to go. Generally, people just for no good reason say buy the 10 with the highest yield, but you could buy the 5 or 10 kind of gives you a little more diversification, maybe. And depending on how you account for this, what year you do it in, whether you buy them and hold them forever or whether you rebalance, you may or may not beat the overall market average with this strategy. It's actually one of the better strategies that is not just buy the entire market through something like SPY or an S&P 500 dividend or index ETF. So by buying these temporarily beaten down assets, you can achieve long-term gains that are better than the market as a whole. And where do you think I might be going with this? Why I trotted out, like I said, these three poor maligned sets. Of course, Adventures in the Forgotten Realm, following on the heels of Modern Horizons 2. Midnight Hunt, probably still caught in the Modern Horizons 2 hangover, and Crimson Vow, who doesn't love a magic set based around weddings? So these are three products, and specifically these combinations of product with type of box, draft, or set that I bought below market price. Now, once again, market price varies a lot. It depends on whether you're a big card store or a small card store. Different buyers pay different amounts of money wholesale for products at the distributor level. That's just the reality of the business. But these AFR boxes, I got a case of these for about $79 per box. The wholesale price is up to as high as $90 a box. So if you're just a nobody tiny card store just starting out, you have no credibility, no contacts, very little capital. As a card store, you're going to pay about $90 wholesale for a set booster box. And I got these, a case of them, at $79 each. Modern Horizons, Midnight Hunt, I always do that because they both have the same initials. Midnight Hunt, I got these set boxes for $83 each, a case of them. And again, $90 maximum wholesale. Some stores will pay less. And the Crimson Vow draft boxes, $81, all shipped and out the door, is what I paid for it. And the wholesale cost is up to around $85, $86. Again, if you're a nobody card store just starting out. So my point with this is when you pay low, below wholesale prices, when you're patient and you wait for them, when you strike when the iron is hot, when those wholesale prices are to be had, and you get a whole case, then you've lowered your cost basis below what a lot of card stores can lower their cost basis to. And that really puts you in an advantageous position long term to realize above average gains. And similar to the Dogs of the Dow strategy, these are not terrible products. Arguably, right now, people think Crimson Vow is an awful product and probably the worst Magic set ever made. But, in time, it will go out of print. In time, while it's still in standard, other cards will be released that synergize with cards in this set. So the long-term outlook for even the worst of these products, Crimson Vow, is not terrible. It's not a total dumpster fire. It's not going to zero. It's not going to remain at $85 or less for the next 5 years. And to a great extent, if it remains an unpopular product for the rest of its lifetime in standard, WotC just won't need to print as much of it, and the population of it will be lower going forward. And so much like the Dogs of the Dow, the negativity and the low prices and the bad value are temporary. They'll go away in time. Magic is a well-managed product, generally. WotC is, most of the time, a competent company. And all three of these sets will age well in the years to come. There's nothing particularly awful about them that makes us think that even 5 years out, the prices will be terrible. And so much like taking a Dogs of the Dow strategy and buying the current losers and potentially realizing outsized gains, when you see things at below market price, you should think long and hard about buying them. It's probably worth it. So let me know what you think. Tell me in the comments if you have any interesting stories about doing this. And if you like this kind of content, like, comment, share, and subscribe, and join me on Final Trade. Thanks a lot.